All right. Thank you very much. Thanks for the patience and for waiting. So we'll start with digital as we discussed. Ajay, we'll start with you. See, over the years, we have seen customer onboarding as a process evolved over time. The technology has also evolved, which has impacted customer onboarding as well. What shifts have you observed in your experience in the digital infrastructure supporting onboarding transformation?
See, the digital onboarding, when you look at onboarding perspective, right, I think we've gone through a paradigm shift over the last decade or so, if you ask me. It used to be always a compliance first experience be done, kind of a thing now. But now today, if you look at it, it is it's an ideal blend of compliance plus UX or a customer experience perspective, right? So onboarding now through the DPI and also the whole financial ecosystems first on making onboarding easy, I think is today in a much better shape than it used to be earlier. If you look at say a decade back, it used to be very manual. Today it is pretty much, I think on the consumer side, I don't think there is any physical interaction at all which is available. It is completely digital. But on the corporate side, on the business side, it is still a phygital model, though to a large extent, at least on the sole prop, which is, from a Fintech perspective, a large part of the onboarding does tend to be around sole props and all that. That, is still largely digital, but the rest of it tends to be physical. If you look at, from a government initiative, I think CKYC has been a very, very critical DPI. It's kind of a central nervous system, if you ask me. And though right now it is more on the input mode, output seems less. But if you look at the 2025 budget announcement from the FM, there is a very clear direction that the whole CKYC 2.0 will need to be revamped. And that, I think, will become a thrust where the KYC will truly become interoperable. Not only within banks, which is what the case is today, but I think across all financial entities. I think that's going to be a big move. And coupled with that, I think if similar to IFSCA, where in GIFT City, for example, where there's a common regulator and hence there is a ability to do a unified onboarding. I think if even in the India DTA, if we are able to apply that along with the CKYC, I think we would have really done a lot. Then if you look at the digital stack, the Aadhaar and DigiLocker and others, I think that's fundamentally shifted the way customers are onboarded. I think Jio was probably the best example where they onboarded almost 10 crore users in less than 6 months. And I think Zerodha during the COVID and so on and so forth. I think there are numerous examples of that. VKYC, I think, has again been a big shift. Again, it became person agnostic, did not depend on person to go face to face and meet the customer. You could actually sit at a central place and onboard a person. So I think that those are a few areas that I believe from a onboarding perspective have fundamentally shifted the way we look at customers and give them the first experience of entering into a financial ecosystem.
That's right. Thank you, Ajay. So talking about first experience, so Sanjeev, I would like to ask you. So you've seen supply chain finance evolve over, I think, more than 2 decades now, right? From a financial inclusion perspective, what do you think will define the next phase of safer and more inclusion in financial or credit in India?
So I think so far what we have seen in supply chain is that there's a big guy. That big guy is selling to a small guy, or the big guy is buying from a small guy, right? Because of that big guy, the supply chain is considered to be safe, and financial institutions like us are able to finance the small guys, whether they are on the downstream or on the upstream. I think the real uplift in supply chain that we want to see is from a not so big guy to a small guy to another small guy, as you go down the chain. And that's precisely, if you see, there are lots of FMCG players who've been challenging financial institutions to figure out how can you finance the retailer who's selling goods to individuals like us, right? Now, these retailers are multi-brand, they're stocking multiple brands. So one of the cardinal principles that we use when we are financing a distributor of a single brand, we go back to the big guy. This distributor has defaulted, stop supplying goods to this person, right? And then the distributor is worried about that, saying that if the big guy stops supplying goods to me, what will I do for a living? So the distributor keeps paying me money, right? So that's how the whole lubrication happens. But if this is gone down to a multi-brand setup, one brand stops supplying, his life or his or her life will go on. Other brands are continuing to lubricate his life. So I think what we need to do is that, figure out some alternative means of underwriting that small guy. He or she is in the middle of this flow of goods. But how do we break free from the traditional method of underwriting, which is essentially relying on that big person in the middle of the flow of goods? That has not yet happened, right? I think there's a lot of talk and people are attempting to do it. People are using GST data, people are parsing bank account statements and so on and so forth. But you still need to go physically meet that person on the ground. India is a big country and, these small guys are all over the place. So how do you have feet on street who actually go monitor and see that, this person who's taken money in the form of supply chain is actually using the money to buy goods and not investing that money into real estate or in the stock market and so on and so forth, right? So I'm just trying to summarize some of the challenges that we as financial institutions are facing in mainstreaming supply chain. There's a lot of kind of potential over there. And our per capita income is approximately $2,500 per person. It can go all the way up to $10,000 where, China is. So, the amount of throughput which is going to go through this economy can just, grow manifold. And, if we keep growing at this 6.5% per annum, etc., the throughput is going to scale big time. So we need to really figure out that how do we finance the whole flow of goods and services, both upstream, downstream. But if you ask me, are we there? We are not there yet.
I just want to add on, the point that Sanjeev made. And he made a very prudent point that today, from a supply chain perspective, if you look at it, it's typically the first layer, which is the anchor to maybe the direct linkage to the anchor, which is where most of us have, solved it, right? On the payment side, very, very easy to solve. On the sales side, is still largely is solvable. I think here, we took a step and, Axis, Yes Bank and, few other banks actually have a consortium, created a consortium called IBDIC. And with IBDIC, what we did is we actually participated in RBI sandbox, which was on deep tier supply chain financing. Very innovative concept. So what we did actually was there's an anchor who has given acceptance to his first level supplier. Now that's a very easy solve, right? Everyone is very happy to finance that because it's a payment risk of the anchor. But what we did is we went one level, in fact 2 level down. So anchor to tier 1, we ignored it. We went to the tier 1 and said, tier 1, who are you buying from? So which is the tier 2. And those are like really chotu suppliers. And then we further went down saying tier 2, who are you selling to? So the tier 3, which are like really, really micro, right? Now, what we did was the anchor acceptance to the tier 1 was asset tokenized, and that asset tokens were transferred to tier 2 and tier 3.
Right.
And that is how, the acceptance or the payment risk of the anchor got translated down, and we were able to finance the tier 2 and tier 3, which in normal course, in fact, the tier 3 was not even in the financial ecosystems. So it was a new to credit. Now imagine you are able to give a new to credit a very good price based on a tokenized asset which you got from a tier 1 anchor, from an anchor. So that's really the beauty of deep tier supply chain financing. And actually, when you look at new emerging technologies and how you can use them for inclusion, I think it's a very classical, case. And like he rightly said, that's really where the opportunity is. And if you have to go towards the Viksit Bharat, unless we solve for that chain, that's going to be the key mantra.
Very interesting. I think you mentioned newer technologies should come in, and I think to the last mile we are still not there. However, data we might have, however much data we might have, there is still in supply chain financing there is still an end-use data that is very important, where you cannot ignore the physical aspect of it. Very interesting. So when we talk about technologies, I think I'll ask Reeju, being at the infrastructure layer or the technology layer. You power last mile flows for a lot of lenders, and you provide all the technologies to empower them to make them to help them make the right decisions. What do you think can still be improved in the digital onboarding process or the disbursal process even to help it scale faster, but not at the expense of risk?
Sure. Yeah, can I bot? Yeah, I think Nitin, you will probably also answer this better than me, but you're the only. Yeah, I think while we are a payments company, I think we spent around 10 years in payments, but I think around last 3 or 4 years, I think as Nitin was mentioning, we have kind of explored this space of fraud mitigation, risk, and also onboarding. So just sticking to onboarding, I think the idea would be to kind of make the user kind of fill the least amount of inputs and being able to derive the maximum kind of extract maximum context about the user from something as little as a phone number. And at the same time, I think being able to predict the kind of onboarding journey the user would take, right, which would happen by knowing, let's say, for instance, is this user registered on KYC? Is this user, kind of registered on DigiLocker, right, by just knowing their phone number or, by knowing their PAN. So just being able to, predict that journey and then being able to, drive or usher the user through that journey. I think that is something that can, I think, improve the reduce the onboarding drop-offs that are there, and then there are things like making sure your pre-fills is happening to a large percentage, things like success rates and latency when it comes to onboarding, not payments, right? So that is there, and so I think like something that is able to orchestrate this entire onboarding journey, ensure the least number of inputs from the user, ideally just a phone number, being able to predict the right KYC journey with a high degree of success rates and the least amount of drop-offs, right? So I think that's something we've been working on. I think that then also would have good answers there. Yeah, that's the thing.
Thanks, Reeju. That's insightful. And today I have a different role. But yeah, you're right. I mean, there's a DPI. Ajay, you talked about DPI as well. I think that's very helpful. And it is up to us as consumers of DPI to be more thoughtful of how we are using the digital infrastructure to help make the right decision. While every tech company talks about speed, we cannot ignore the fin in the tech, right? Fin in the fintech, right? And be more prudent about the use and make sure that the right journey and the journeys are optimized right for the use case that it is designed for. That's thanks, Reeju, for that. But when we're talking about scaling, Rohit, I want to ask you, you've scaled lending across multiple customer segments. We have talked about end user, we have talked about supply chain, but you have worked across multiple segments. In your experience, what are the challenges that you see when lending scales too fast, right? And if you can also share some insight into how do you design to avoid it?
So everybody will talk about the fintech product journeys. I'll talk about when I was building the commerce product into financial ecosystem, which is like Bajaj Mall. It's one of the platform of Bajaj where you can get everything on EMI. When I was building that, where you can just get into it if you have EMI card, you just get into it and buy fridge, TV, AC, washing machine from your nearest dealer at the speed of Zepto. So this was started like around 7 years back when I was building that. So demand was never a problem. The entire scale problem was the fragmented customer journey, dealer journey, and the sales journey. What issue came in when we tried to scale? What went beyond in the fintech ecosystem is like fragmented catalog, fragmented pricing, because like in Amazon, you just enter your card number and buy it on full price. But when you're sitting into the fintech ecosystem, you have to buy it using an EMI. So we trigger your loan. We basically offer you a new CIBIL, and after that, we basically give you a loan. So what challenges we faced is, like in the entire dealer journey, how the fragmentation was done, because it was not easy to give product on loan. Customer ko loan pe product de diya, and it is like delivering at his house at the speed of Zepto. That was the biggest problem. And next is fragmented customer journey. It was not easy to stitch an e-commerce journey in the fintech ecosystem. So these are two things. How we avoided it? We avoided it by taking the best examples as a benchmark. Think like we are building Amazon in Bajaj ecosystem. How we gonna do it in 30 minutes? That's our challenge. So think like end-to-end stitch model. That's how we designed it completely.
Very interesting. Thanks for sharing your experience. Dhanashri, you have a very unique background. I mean, you're lending to green MSMEs. I just learned the term today, green MSMEs, and I become more knowledgeable after this session. But I learned that this segment lacks proper documentation to perform proper risk checks, right? So with this situation today, what are some of the unique compliance or risk challenges that you see? And if you can share some examples of how you have designed around those challenges to ensure trust and reliability as well.
So talking about sustainable financing, right? And so which is deep financing. So essentially you are lending to assets which are having a green impact on the earth or the planet in India. Okay. Now, so if you now the way it is evolving today is largely on the mobility side, which we see electric vehicles, 2-wheelers, 3-wheelers, 4-wheelers, right? The second segment, which is growing very fast in India, is the solar energy space. Now, when you look at the complexity, so one is the industry complexity, right? In the sense that it's an evolving industry. So how do you underwrite that? That's the first thing. The second is when you look at the assets, and I was speaking to a few people here just before this, because like the products themselves, right? An electric vehicle itself is evolving. So then how do you kind of understand that and how do you build that in terms of your product? Third is from your customer standpoint, because if you really look at the segments that we are, it is varying. So when we see, when we went and now we are 2.5 years, so we've hit the product market fit, and now when we go back to our consumers, it's very different. Like you said, yes, we have MSMEs, we have companies or small scale companies which are wanting to move into solar panels or electric equipment financing and things like that. Now, how do you again underwrite them? So, of course, from a lending perspective, it's a very traditional way in which you lend. You are underwriting for the risk. So, the lending doesn't change. But what really changes is your user experience. How are you onboarding them? Second is how do you then get data about it, right? Because like if you want to identify frauds or if you want to understand the risk that the customer is associated with, then you need to build that data platform also very strongly. And that's what was, how we approach the problem. Because actually, believe it or not, in India, we still don't, especially in Bombay, we think that, Delhi is more polluted than Bombay, so we are good. If you go to Bangalore will say, we are still more green than Bombay, which is from Mumbai. So it's still good. So we are like in this comparative zone, but it's really, climate is a challenge for India, for a country like us, which is growing so fast. I mean, one stat that I really like to share in all forums is 35 out of 50, the world's most polluted cities are in India, right? So that was the challenge. So we really broke it down into one, the asset underwriting. Second is the partners that were there, the OEM, because you are unless your mobility, for you have a vendor who is actually manufacturing that vehicle or a solar panel. So it went down to really those kind of steps and building it up through scorecards to better underwriting. Building stronger data platforms to go back and identify those risks and then collect better. So we can go on and on about it, but
of course, this is a very interesting space. Of course, we can learn a lot and be more aware as well. So, but talking about data, and we talked briefly about AI, we can't ignore it, right? And there was a time when we saw it coming, and next morning we woke up and we realized it's all around us. And the morning after that, we said, why are we not doing it? Right? So it's moving at such a fast pace. So Anurag, I think you are at the center of everything, being a part of CIBIL. But just from your experience, what's one fraud pattern that you have seen in the last year that you can say that is only detectable because of advanced data analytics that can be provided by AI? And if you can also like deep dive into telling us what signal was it that revealed that pattern?
This entire digital lending that we have been talking about, that my panelists have already talked about, this had a ramification across defaults in a different manner. Okay, so a lot of the digital lending that happened during the COVID times, the digital boom that we saw, led across to lending across to unscrupulous agents as well. And we could see on the CIBIL side, we could see with the data that we had, this specifically for unsecured loans and products, the default kept on inching a little higher up with passage of time. So this was a cause of concern for us. And what we did was we very specifically, I'm putting on my product hat over here and just getting into the details of this. We specifically looked at those default rates, and we were, as it was inching forward, we were trying to identify how can we isolate it at the point of origination that this particular default might lead to, or this particular loan might lead to an early default. We built out very specific models around this using advanced data analytics. A lot of research went into that. A lot of months went into that for building a model that was capable of holding it across very specific journeys. I'm talking about STPL journeys or PLs or CDLs and so on. And we came out with a very specific product line that was looking at early default on the products like PL, CDL. Okay. As you know, the kind of data that we get and the kind of data that we work with, that is quite large. Any of the CICs get a lot of data around this. And building anything that caters across to the mass market of India, it's a tough affair. We have to do the justice to that entire picture. So that is one of the use cases that we came across. And there are multiple such use cases. I'm just talking about one of the use cases. But this is something that came up in the last 1.5 years, specifically on the STPL journeys. That's
interesting. So, and we also wonder that if AI is here, what are the use cases where we can apply and make use of it? Because it's a solution first looking for a problem, right? But we know that the solution will solve a lot of problems. So, Sanjeev, in your experience with AI becoming more and more relevant in banking operations, right? What are some high impact workflows or use cases where you see that it can streamline corporate workflows, for example, like maybe onboarding or credit assessment or compliance?
Let me just give you a capsule of where all Access is trying to use AI, across various functions. The biggest use case right now, which is live in production, so to say, is informing our branches. Let's say, we have 5,000 branches and a lot of these are in tier 2, tier 3 cities. So, and at the same time, we have at the head office a lot of innovation being done top down and so on and so forth. How do we make sure that the junior most person in a remote branch is really aware of what to do when faced with a customer situation, right? That's where we've kind of built a tool called Adi, where it just works like a chat GPT. It's like an internal, chat GPT, where in a chat form, the branch officer can ask, I have this problem, how do I solve this, right? And what we have seen is that wherever the usage of Adi is higher, the NPS of from the customers being served from those branches is higher, right? So there's that correlation and causation, and therefore we are trying very hard to popularize this tool and continuously refine this tool. So that's been one use case. The other use case is obviously hollowing out operations, right? Today, of course, there are a lot of let's say a chatbot is today called conversational AI, right? So there is some of this rephrasing which is happening, but one of the oldest tools was optical character recognition, right? So if you overlay that with AI and try to do some control functions like signature verification, etc., and make the whole OCR process a lot more efficient, so that the processes become a lot more straight through. Right. So that's another focus area for us. The third is fraud prevention and generating red flags. Right. So in the payment space, for example, one of the areas in which the regulator is pushing us that don't talk about post-transaction monitoring, right? So let's say the way transaction monitoring works right now in banks is that transactions happen and after 1 week, some in a centralized unit is generating a flag saying something is fishy here. Then, that alert is going to a relationship manager and say, can you dig deeper and figure out what exactly happened in these transactions? But by that time, the damage has already happened. So it's all post facto. So where we are really getting pushed by the regulator, and rightly so, is how do you prevent these transactions from happening? So we're trying to use AI in terms of giving some real-time alerts on figuring out that, yes, this is fishy. And therefore, can we alert people over there? On the underwriting side, I think, again, the regulator is very clear. The decisioning cannot be done by AI, right? So where you can use AI, again, is to generate red flags. If the documents have been put together fraudulently, or the borrower is not going by the book and there's something untoward over there, we are trying to use AI to generate those flags so that the human underwriter can then take those red flags into account and then take a final decision. One of the other things that the regulator again is pushing us in is trying to build some fairness in the underwriting process, right? Now, because of the hallucination which is inherent in an AI process, you do not want a good borrower to be denied, financing, and then, that borrower going and complaining, saying that I was unfairly rejected and so on and so forth, right? So there are these challenges in terms of using AI for decisioning, but we are definitely using AI to weed out the wrong guys and at least provide an additional pair of eyes to the human underwriter, so that we can take the right decision. This is just a summary of in all the ways that we're in. There's another use case where some of the more routine marketing efforts, the images which are being used and the copy which is being used, that is being generated using AI. So that is also being done. That's an interesting use case. So it's also because all of us use Microsoft, as enterprise users. So Copilot is there. So all of us are experimenting in terms of how to be more efficient in our emails and our PowerPoints and all of that. So that's also happening at an executive level. But yeah, these are all the things in ways and means in which we are trying to use AI in the bank.
That's a lot of use cases, and probably it's a very fast adoption of a new technology that has happened in faster decision making as well, right? So great. Rohit, I would like to come to you and want to understand what's one AI model your team has shipped that directly cut risk or probably improved conversion. And I'm sure there must have been some enhancements and improvements over time. But what does it, if you can walk through the process, what did it take to get that right?
So let me help you understand where we are adopting AI, and from my personal product desk, what use cases that we are pushing. First of all, where I am using an AI, I have built my personal own EA in AI so that it can remind me every morning what is pending for today and what I have to complete today, and by evening what status I have to update. So I'm personally using AI for these things instead of much more on email or PowerPoint. I'm personally using it as an EA so that it can remind me with a lot of tasks in hand. Apart from that, from acquisition till collection, there are a lot of use cases which we are working on, which I'm proposing. For acquisition, like for a existing customer, how we can sell him additional loan through a conversational AI. Through a conversational chat, how we can sell the additional loan. We are pushing AI on that piece. In terms of underwriting, we are evaluating how it can help us to handle build the confidence, but not the decision. As Sanjeev said, not the decision. Basically, we want to understand confidence decision score is given by AI, but how much we can do an action rate. That metrics matters to us a lot. On that front, we are building something. And apart from that, on the collection side, how our can bandwidth and effort can be saved before the bounce and after the bounce. How the customer can be get an automated call reminders for paying the EMI upfront and keeping the money in their account. So these kind of a use cases we are building up. Apart from that, on the service side also, we have started an AI piece where the quality check of the agent. When the service call comes, there's a particular quality check happens whether the person has given the absolute reply perfectly or not. So in that, we have already implemented AI and we are seeing the results. And this is the piece where we are using a different use cases from acquisition to collections in the entire space. It's been 6 months. I have just stepped in and we are just discussing it. Work was already going on and we are working on it.
And 6 months is a long time in AI world. I know, I guess leading the pack. I know. No, I think there's a lot of use cases to learn, and there would come a time when we'll say there is an agent for that, right?
Yeah.
So definitely, I mean, very interesting. But let's apply to a very unique, or I would say unique in this group's use case, Dhanashri, for you, because you lend to customers again who may not have clean credit data yet, I would say, right? But is AI applicable or useful there? And if yes, and how are you using AI to personalize corrections or repayment nudges in a low data environment?
Right. So, see, it is across. Firstly, I'll definitely speak about collections because that's something that, that bothers every lender. And in terms of how you are operating smarter ways, like, ML models have been a part of, early warning signals. But now it's become like it's more real time. It's more, it's also those models are learning on their own. So it's also helping us predict better. And India is a very large, complex market, right? And the kind of products we have, our end users are also very different. So a two-wheeler segment is again very different from a three-wheeler to a MSME to a residential rooftop solar. So what that is doing is that, like for example, a location strategy. So I remember like Sanjeev talking about on secular branch, it's the branch manager, what decision he's taking, but then what about what is happening around the branch manager? What is happening in that location, right? So it's also about the consumers within that segment. So can you kind of identify patterns better? Can you, can you build smarter early warning signals in terms of your bounce rates, connections? You can, you can redeploy your manpower in a much better way, So it's not just about being smarter at how you operate, but it's also about better resource utilization. So that's one thing from a collection standpoint. The other is, I would say, from an operations also, because we are a lean startup, it's also about, how you can do things faster in terms of your disbursement processes, your operations, right? So we build out certain things, which is, something which a manual process would take about 15 to 30 minutes. It's, taking about 5 seconds to kind of go through the checklist and review a response. So it kind of opens up a lot of bandwidth to service the customer better. The third is, and which is like the room is filled with product managers. It's really helped me and my team to prototype much faster. So in terms of what we are, in terms of ideation, in terms of what we want to offer, whether it could be a cross-sell, upsell, like getting those buy-ins from stakeholders, making it, even conveying it to the engineering teams in a much better way. So I think all that is like a lot of things. The product team itself is prototyping. One more thing which I would also say to the product community is that, see, we've been like so feature focused, right? But a lot of things now, when you do faster prototyping, experimentation, that it also kind of leaves you a lot of space in terms of how you can envision or how can you really contribute to the business in a much faster way. So some of those things also we are kind of building in, like in terms of surveys, them using a lot of tools to kind of get that data quicker, faster, easier, building those things out, getting that user research done much better, testing. So I think it's really helped us prototype a lot of things and like scale it up much faster. And we are like a very young company today, so it kind of really helps you to work across the board.
Awesome. Thank you. So we are all talking about data and alternate data and how AI is helping us consume that and make our decisions faster. But Reeju, from Cashfree's point of view, what do you think is the most underutilized AI signal that can be or should be used in terms of loan repayment or credit assessment that actually works?
We are also doing a bunch of things in AI. I think an important part here is like the feedback loop. I think Rohit was mentioning, like because there will be a lot of output, but is the output actually good enough that you can trust it? So that is very important, I think. And whenever we are discussing, what is the rate of false positive, what is the precision, in your model when we are flagging risk, I think that is something we focus a lot. I mean, that is essentially the quality of our product. Because there are many products in the market, and one of the, I think, low hanging fruits, I think, that we can do, and what I think is new, is essentially like the blacklists, right, that are there. I think the more data you feed into the model, you can live with like a less sophisticated model. So I think just the things about blacklists and, let's say, the data points around device, let's say a phone number, right, whether this SIM is recent, is it on a VPN, what kind of internet connection are they on, SIM swap, right, when was the SIM last entered onto this phone, right, some things about device, device fingerprint, right. So essentially there are a lot of these details that our job as a product is to give the right signal, right, and keep the level of abstraction of this data points outside, and just tell whether this is a risky user or not. And then I was mentioning the blacklist. I mean, you have, I think the most recent is DOT, right, Department of Telecommunications. You have a UPI level. I think you can't call it blacklist, but like a suspect list. I4C has something, right, and then I think there is the NCRB, National Crime Records Bureau. So this is like basic. You just put that into your system and have like a graph database, so that not only do you have like a first degree, you have second, third, fourth degrees of elements, and someone related to these parties also you can flag. So that will just give low hanging fruits that I think you can do, and then these signals, right, based on phone number and let's say device, right. So yeah, that those can drive up the precision, frequency, right, and then the quality of your machine learning models. That's there, obviously.
So around a year and a half back, when AI was sounding like a buzz, I saw a very stupid problem quite by many product managers. So we get reviews on App Store where our customer service teams in response to it. I built a model, feeded all the data which we have replied in last 4 or 5 years, coded accordingly. Whenever the review was coming, automatically revert was coming on the service guy. We don't need to hire more service guy. You're just getting a response from AI, and you just have to click OK, and it goes onto the Play Store and get published to it. So that was the most stupid problem which I solved using AI, and it can help many product managers across who are sitting here, who are handling the app piece.
People are putting a lot of information on AI. I mean, that is, all the LLMs are becoming a much more richer data. But that also poses a challenge for DPDPs. They must have not seen it coming.
It's a controversial now. DPDP.
Well, it's yet to come. We'll see. Compliance is another thing that that guides us, that we can't ignore, but it also hurts at some point. There is a thought process that compliance poses a challenge to providing a good customer experience. But there are both points of views, both for and against, and probably somewhere in the middle. So let's probably talk about that aspect as well. Anurag, you have been working with a lot of lenders across the board, right? Different types. What's one part of compliance that they underestimate and keep underestimating until it hurts?
So in this avatar, in this role, plus my previous role, one of the biggest challenges that I have come across lenders, banks, financial institutions in general is we have already been talking extensively about KYC, but something that I've seen gets missed out or gets ruffled across the pages is re-KYC. Okay, something where you are supposed to do due diligence on the existing customers at a periodic basis. Maybe it's the tardiness of doing business on a day-to-day basis. In my view, again, this is my view only, if there is a miss that happens on KYC, I would forecast that there are 2 or 3 misses that happen on re-KYC in the industry. And
I don't believe that any lender is apart from that. It's just the tardiness of doing business on a regular day basis that the re-KYC just not comes into the picture. I would think so that a great use case for AI would be to build specific engines, specific components around re-KYC as the central pivot point rather than just doing KYC. Compliance is getting very costly. We need to make sure that you are hitting the right pointers. Specifically, we talked about ETB customers, NTC customers. Once they are in, how can you reduce the overall cost of doing re-KYC for those customers at minimum possible costs and using AI for that? That is one thing that I feel so would be a good problem set to solve in the times to come. And with that, I think infrastructure products are also evolving, right? Providing that at least capability to banks and financial institutions to do those effectively. So Ajay, as these infrastructure products that we talk about with providing KYC and all the risk assessment capabilities, as these products evolve and mature, how should banks evaluate the decision of a build versus buy for an onboarding and risk systems perspective?
Yeah, before that, I think the point that you made on re-KYC. See, re-KYC is not a one-off project, right? That aapka KYC is expiring and then you do re-KYC. Re-KYC is actually a ongoing process, right? When an account is opened, when you are transacting, on a every transaction basis, the account is getting enriched and it is also getting evaluated, right? So what do you mean by KYC? It's know your customer. So अगर मैं trade transactions कर रहा हूँ या payments कर रहा हूँ, collections कर रहा हूँ, when I am doing a transaction monitoring or a FRM, I am actually doing KYC, right? Re-KYC. So I am seeing what this customer is doing, what are the payments, what are the collections, is there a pattern, is there a issue, then I raise STRs and do so on and so forth, right? The end process of the re-KYC, which is again doing the re-onboarding, is different than the re-KYC. So I just want to break that re-KYC into two parts. तो ये एक ongoing KYC होता है, एक re-onboarding होता है. So that's, I think, how at least the way I look at it, and things happen. But to your point, and you touched upon probably the most critical part, and this is a classical question, right? Should you build, should you buy, which is better? I think build what is core, buy what is edge. I think that's the fundamental principle. Where there is any strategic value to or that product is actually a strategic differentiator for you, obviously it makes sense to build it so that you retain that USP for yourself, at least for for some time. Eventually banking is not a rocket science. Whatever you build gets replicated over the next few months or so, right? But at least you do have that uniqueness for a certain period of time. Regulatorily, if the regulator sometimes expects that these are things which the bank should own and the bank should manage themselves, those are areas which obviously go to build. Otherwise, typically, and at least see, we have been a new age bank, right? So we are ourselves a startup bank. So for us, it was very clear that we did not have a baggage. We did not have to go through, all the large banks, because they were stuck with a lot of monolithic platforms, etc. So for us, it was very clear that, we build the layer and then everything over that was modular, and that's how Yes Bank has built its tech infrastructure, and that's how we have built it in a very scalable manner that today, we are one of the leading banks in terms of managing payments and so on and so forth, right? So for us, buy comes very natural. Wherever agility is required, wherever we believe that we can have faster go-to-market through a buy model, I think we clearly chose it. But of course, where it is regulatorily required that we should do it ourselves, I think that's something which we tend to build ourselves. Again, cost also becomes imperative. Yeah. So where it is capex versus opex, so those are again few factors which come into play.
Correct. Awesome. Thanks a lot for sharing all your insights. But I would probably have one last question. and anybody can choose to answer. So if you want to redesign one process altogether with all of these technologies coming in, with all the knowledge and the insights that we have gained over the years, which process would you redesign today and why?
Just before redesigning, see KYC, just one point which Akil is very, very critical. So, being an ex-banker, see what happened was, India, and you spoke about NDC earlier on, right? See, we have a large migrant population, right? Like people switching cities, switching jobs. When we were onboarding a lot of customers, what we realized is that whether you do KYC or you do re-KYC, many times you would, and especially if it's an NTC, it would many times get, not get filtered very well to the chase that you build in, right, into your platform. So I'm not just talking about bureaus full, but I'm saying in general, if you want to have like an onboarding process, whether it be video KYC or what, where you see an address mismatch or you see that, oh, the Aadhaar data is saying something else, right? And then it kind of triggers your fraud signals, But then the problem is that we do have, we have a large migrant population, and some of it could be moving from an emerging affluent to an affluent segment. So how do you kind of underwrite for them? How do you kind of make them part of that ecosystem? And then coming back to your redesign phase, it's not a redesign, but I think it's very, very important that, as you build your models, whether it be for acquisition or onboarding, you need to be very, very cognizant of the complexities of the market, and you need to encourage that kind of. So it could be an NTC, and then, within the DPR, you also have, account aggregators, and you have a lot of ways in which you can actually enrich your data so that you can really acquire, onboard more customers, because if you still look at financial services, our penetration levels across, whether it be lending, investments, even you trading, it's not really up to the mark in terms of the potential that India offers. I mean, payments has been a wonderful story. But then beyond that, when it comes to financial products, it's still very, very limited. So then how do you kind of create those data layers within your acquisition and onboarding process so that you can underwrite for youth, you can underwrite for NTC segment, you can underwrite for self-employed segments, which are not like where the documentation is not easily available, the collateral is not clearly visible. So I think some of those things, as you build in, becomes very, very important to kind of grow the market along with your own growth.
So let's take a couple of audience questions as well. Otherwise, we can keep on talking about these topics for a long time. It's a very rich one. Anybody?
GV panel. I'm Pramod. I have a British. Thank you for allowing me to ask the question. I have two questions, if you may. The first one is amending onboarding is a very sensitive use case. And with the prevalent social engineering, misinformation, and the rise of AI, which leads to deep fake documents, etc., do we risk a systemic breach of trust with the consumer and lender? And if so, how do we safeguard? That's my first question. The second question is, historically around technology, regulations have largely been retrospective. But in case of AI, how do we proactively
Yeah, I think on the first part, and we've thought about that, right? And then that is one of the points I wanted to mention, the last question, right? Like, I think the role of AI will be to kind of reimagine financial services to bring scale. But to specifically answer your question, lohe ko loha kaatta hai, I think is the thing, right? So you have to, it's maybe at some point not be optional, but you will need to have these, AI to detect these deepfakes, right, and actually then stop the fraud, because an average agent who is maybe doing weak KYC, at a bank will probably soon be fooled by the kind of video content or the kind of spoofing that AI can already do. So I think it will be essential to find a technological solution to this problem that is, faced by technology, and and it won't be optional at some point. It will be mandatory, and that is again something that we should see in video KYC when we are assuming that an agent sitting in front of someone is kind of the right way. I was talking to someone at Amazon Pay, right? So they have cases where, let's say, there is another person behind this person who is prompting them to say a few things and complete the VKYC. Now, this person may be in the screen, this person may not be in the screen, right? Now, an agent sometimes can get, like fooled. I think at some point AI will do a better job of, detecting these kind of edge cases, right? Two people in the screen, two different voices. So yeah, I think it will have to be a forced progression at some point of time, to answer, that. On AI, I think it is, I don't know if someone else can maybe do. I will probably ask ChatGPT, but yeah, I think there are data privacy and security concerns, right? For instance, prompt injection and all, right? We think about that all the time, right? Like, should we give a random AI agent and on what, let's say, rule-based access? Should we give them access to our internal system to process refunds, right? And then even, let's say, request payments. So that is something we think about, like how to kind of mitigate the access, but I'm not an expert here. So,
See, when it comes to AI, for both your questions, I think because there is fin involved, there is money involved, there is customer involved, there is trust involved. I at least do not foreseeable I do not see in the foreseeable future that it is predominantly going to rely only on AI. I think the regulator is very clear, at least at this point of time, that human in the loop is going to be there. So it will always be a phygital model. And while, like you mentioned, while they could, agentic AI could take over, etc., but I would always believe that there would still be a hybrid model. And, there would be instances where the regulator would expect that, human intervention would be required to cross-validate, to make sure that biases are not there, or, it's actually, there is a second factor to mention, which is there. So I think, the regulator will not, be very keen to come out with a regulation very quickly. I think it's, they are also in a, wait and watch model. And I think once they really get a firm view in terms of how this is evolving, I believe only then a regulation will come. Like blockchain was a classic example, right? I've been part of an RBI committee evaluating blockchain and, some of these emerging technologies. It was very clear that there was absolutely no industry understanding of, and complete industry understanding of what are the risks involved, what are the, typical worst case scenarios which could happen. And hence, if you see, there has been no regulation around, some of these technology, because regulator will not come out with a regulation till they are very, very clear about what the total risk is involved and what the mitigants could be.
So look, I think AI is an advanced form of digitization. If you just take a step back and look at digitization itself, if you look, I think, and he can talk about this, a lot of, delinquencies that we saw in unsecured lending over the last 12 to 18 months was actually frauds, right? And frauds enabled by end-to-end digitization. And one of the biggest learnings that, lending institutions are having, that should we really make this whole lending process frictionless, or do we need to put some friction in between till such time we get our hands around some of these fraudulent practices? So this is a real challenge that financiers are facing, and there are lots of lessons to be learned from the NPA cycle. In fact, a lot of that NPA cycle in the unsecured retail lending is still passing through the system as we speak. I don't think we have learned all our lessons over there, but they are there. And one of the things that we are always looking at is that we do deploy digital scorecards, and we look at early delinquencies very, very closely, and then we disable certain scorecards or we fine tune certain of those. Having a feedback loop, which is looking at early trends in the delinquency data, so that you can rectify some of these digital scorecards which are pumping out these kind of transactions. That's one biggest takeaway that you've had in this whole lending process.
Thank you. Thanks a lot, everybody. We have a lot of exciting agenda lined up for the evening. It's not over yet, but I would like to thank all the panelists for spending the time and providing all the valuable insights and the knowledge to all of us. Feel free to catch up, all of you, after this discussion as well. With that, we'll wrap up this session and we'll proceed to more exciting sessions further. Thank you. Thank you, everyone.